The current market condition is almost perfect for you to make a lot of money going forward, and it will be the market conditions between now and the summer that are going to build potential millionaires in the future. But what do you do if your account is not big enough to buy into these stocks that are really expensive and you can't afford to own shares? Do you miss the opportunity? Well, no. That's what this video is for. I'm going to show you guys exactly how you could make money and take advantage of the current market situation, even in smaller accounts. And if you have a bigger account, it's just going to give you even more power to achieve this goal with LEAP options. I'm going to explain start to finish what LEAP options are, use my AVP strategies, and show you guys exactly how to get in and out and execute these trades to make a very high return in the coming 6 months to a year or even 2 years. This is going to be all you need, everything LEAP options, the last LEAP option video you'll ever need to watch. Before we dive in though, I want to give you guys a huge announcement. This Friday, tomorrow, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific, my free masterclass webinar returns. But this time I'm going to be teaching more unique strategies that was only exclusive to my Discord and my elite members previously. You don't want to miss it. I'm going to show you how to make money in a down or an up market, explain to you guys what's going on and manipulation, and unveil the truth behind the stock market. You don't want to miss that. That's how we made so much money in a down market over the past few months, which you can see on the screen. I made over $20,000 just on my Microsoft trade that I held from March. So you guys don't want to miss this. Very limited spots. Links in the information box below. Let's dive right into LEAP options. So first you have to understand that a LEAP option is a long dated call option that you buy deep in the money. This way it gives you more delta exposure, allowing you to gain more value as the stock goes up. It also protects you if the stock drops, and it gives you more time because theta is working against you as a buyer. So you need more time. So LEAP options typically are a year, but you can go 6 to 8 months, but usually they're a year or more. It just really depends on the stock and the strategy I'm looking to run. But in this video, I'm going to show you how you can use 1-year LEAP options to generate safe, passive, consistent income. And not only that, take advantage of the move of what's going to be happening in the stock market in the coming few months. And like I said, a LEAP option is safer because it gives you a lot more time. So I'm going to show you on a chart exactly how you want to get in and explain how these LEAP options work, why we're picking the LEAP options at the strike prices that we're choosing, how you can sell covered calls against these LEAP options to make money. So really, it's a multi-step process. We have to first identify a good stock, one that's near the bottom of my AVP, which I teach in Discord and my advanced mastermind classes, as well as the webinar. And that gives us, similar to Bollinger Bands, where the top and bottom of a stock is, so that you can get into this stock. And once you do that, you have to pick a strike price and an expiration date on your LEAP option. And then you also have to understand dollar cost averaging and my 33-10 rule. This way you can average out your cost on the LEAP option, and then you're able to sell covered calls against it and take advantage of a move on a stock. So we're going to be looking at different stocks to run this on. But first, I want you guys to understand completely how a LEAP option works and how we pick strike prices. So we're going to dive into the charts. I'm going to show you guys all of that right now. So the first thing we're going to look at is SPY. SPY is a very safe ETF, basically the safest you can get when you're investing in the stock market, because they rebalance. So if a stock is bringing them down, eventually they get removed or a new company is brought in to balance things out, which is why they rebalance multiple times a year. And this ETF consistently goes up. Even with pullbacks, if you look at it over the course of the past 20 years, you'll see that the stock consistently goes up. Even with dips that are bringing the ETF down quite a bit, it only lasts 3 to 6 months, then it goes back up again. But you can draw a line at any point in time, which I'll show you here. And over the course of 1 to 2 years, it's always up. So when you look at the daily chart, this pullback lasted 2 months. This one was like a week. This one was like a week. This one here was another week or two. But if you really look at it over the course of a year, it's always going up. And if you keep going back, 6 month dip right here, but then look at all of this gain there as well. So it's very much always going up. It's the safest bet when it comes to buying a LEAP option. It's very difficult for safety to beat SPY. So we had to pick a strike price. And we're going to use AVP and Bollinger Bands. Bollinger Bands very similar to my AVP. My AVP is a little bit better, but Bollinger Bands, if we look at that in the 4-hour chart and the daily chart, this gives us a much better insight site, and we can see that encompassing all of this data, the 200-day, 10-day, 20-day, the 50-day, the 100-day, and then of course the Bollinger Bands are also set up to encompass 20 days as well to give you an average over that. We can see exactly where the stock is likely and unlikely to go. So I'm going to clean all of this up right quick. Go. We're going to get rid of this as well. And we're just going to look at the Bollinger Bands and the moving day averages. When we look at this in a big picture, the AVP is actually between 530 and 570. So like 550-ish, maybe 60-ish, roughly. So during this timeline right here, we can see that ultimately it looks like a safe bet would be maybe 520. Like right around here would be pretty safe, 520, 540. So what we're going to do is we're going to look for 540 because we're looking for a delta roughly of 60 or 70. 70 is much safer, meaning essentially it's like you controlling 70 shares or a 70% chance of being in the money at expiration. So every time the stock goes up, this 70 delta option will go up by 70 cents. So what we're going to do is we're going to go over to SPY and we are going to look at LEAP options. And we're going to look 1 year out, which is going to be March or June, possibly April of 2026. We'll see what dates we have available. So we're going to be looking at March 31st of 2026. And we want to make sure we have a 70 delta. So we're looking at call options on March of 26 for 540 roughly. Let's see what that delta is. That delta is 80, which is pretty good. We could actually go with a 550, which is 76. Which is much better because it's a little bit cheaper, and 76 is more than good for this strategy. 71 is also good, so we could go with 560, which is $4,000. Now, if SPY was to go up from its current price of 580 to say 640, which is a $60 move, and we want to gauge what the value of this option would be if that $60 move happened, well, then we would look at the $500 strike. Whatever the $500 strike is right now is what the 560 would be worth if there was a $60 move before expiration. So you can see that the 500 is worth 9,200. So if you were to buy this LEAP option for $4,000 and SPY was to go up $60 to say 640 in the next 8 months to a year, then minus a little bit of theta. Now, if we look at the theta, which is roughly $1 a day, you'd lose about 30 a month. So you figure you would lose roughly about maybe $300 over the next 9 months. So it'd be worth about $8,900. So when you do this math, it means that as long as before the new year, SPY would go to 640, this would be worth close to $9,000. You would double your money, more than double it. You'd make $5,000 profit per LEAP option. So if you have a smaller account, let's say a $100,000 account, you can't afford to buy SPY, then you could buy at least 2 or 3 of these LEAP options, maybe 4. You could double your money on a $30 or $40 move. That doesn't even account for selling covered calls, which we'll get to in a minute. So if you have a bigger account, like a $500,000, $600,000 account, then you could put $60,000 into LEAP options because that's 10%. And essentially, this would be the ultimate strategy for anybody with a $500,000 portfolio because you could essentially get 15 LEAP options, which is like a lot. So this is perfect for anybody with a $500,000 portfolio. And I'll show you why. You're able to get $50,000, which is 10%, divided by 4,000. So you could get 12.5 LEAP options and a $5,000 profit. In less than a year, you're making $62,000, not including covered calls. So essentially, this is going to give you double your money. It's a very powerful strategy. If you end up going even more in, then you can make more money. But essentially, my 33-10 rule applies. You want to be able to dollar cost average these LEAP options. For example, if you buy 2 LEAP options for $4,000, but then the stock drops, the ETF drops to say 560, it drops by $20. Well, then this is only going to be worth what a 580 would be worth, which is a $20 difference. They'd be worth $2,500. So if you bought 2 LEAP options right now for $4,000, that's $8,000, and then SPY dropped from 580 to 560, well, then you buy 2 more LEAP options at $2,500. Which is $5,000. And then you divide that by 4, giving you an average cost of $3,250. So you can dollar cost average as long as you buy the same strike and same expiration, you'll get a dollar cost average on your LEAP options. And you can also use LEAP options in conjunction with shares. If you own 100 shares of SPY and the stock, the ETF drops, you can buy LEAP options so that when the price goes up, the money you're making on the LEAP is making up for the losses on the shares. And that's another strategy I teach in my mastermind and my Discord, as well as something I'll be going over in the webinar. It's very important because you can utilize LEAP options. If you're over extenuated in shares, for example, SoFi, you have 1,000 shares and you have an average cost of 15, the stock drops to 12, you can buy LEAP options that are much cheaper, where you can actually buy enough LEAP options to give you a 50-50 split like shares, where it would only cost you about $4,000 to buy the LEAP options instead of spending $10,000 on the shares. And then you essentially have a 50-50 split, giving you a break-even price of around $13.75 instead of $15. So if you do it that way, you don't have to wait to 15, you break even at $13.75. So when you're at a $1.25 loss on the shares, you actually would be at a $1.25 gain on the LEAPs. But that's for another video. But if you want to see that video, comment below. I'm also going to be talking about that and teaching it in the webinar tomorrow, Friday, May 23rd. So there's also that to think about, that you can utilize LEAP options to generate income and to get you out of the hole on shares, which, like I said, is a separate subject. So once you own these LEAP options on SPY, you can hold them like shares and make a lot of money. And you can do this on different stocks. We're doing it here on SPY. You can then sell covered calls against them, but just understand that LEAP option for 560 costs $4,000. $4,000 on top of 560 is essentially 600. So the stock would have to be 600 or higher for you to break even at expiration to have intrinsic in the money value. So when you're selling covered calls, you want to make sure you're above your cost basis. And so what you're going to do is $4,000 divided by 100 shares is 40, and 40 plus 560 is 600. So you want to sell your covered calls above 600, because if you sell a $605 call option and you get assigned, well, then you're going to get 60,500 minus exercising a LEAP option at 56,000, leaving with 4,500 minus the $4,000 on the LEAP option that you purchased, giving you a $500 profit plus the whatever premium you collected for the calls. You can make $500 to $1,000. That's the way that you operate on LEAP options safely. The great thing about LEAP options on a $200,000 or $300,000 account is that although they don't last forever like shares, it allows you to get into so many more positions and make even more money. You can make exponential amounts of money on LEAP options as long as you know the strategies, the analytics on the stock and the technicals, the fundamentals, earnings, and you understand the plays and you're utilizing my strategies. You will be able to get into these stocks in the middle to near a bottom. This way there's more upside, making more money. SoFi is another prime example. We look at the AVP on SoFi. AVP is between $11 and $12, and we're at $13.22. So we're near the top of the AVP, which is right around here. We're actually more like in the middle, because my AVP, which I teach my mastermind, I can't teach that right now. But essentially, if I draw it, it's going to overlap on the Bollinger Bands. My AVP says that SoFi is between 11 and 14, meaning the median average is around 1250. And if I was to turn on the Bollinger Band and go to the daily chart, it's telling me that the average is about 13. So it's not far off. I feel like this is because of my standard deviation. Yeah, if I bring the standard deviation to 3, the average is about 1301 instead of 1306. So pretty close. I use my AVP more because it's more accurate. It's a custom strategy I built off of dark pool data and hedge fund analytic tools that I learned when I worked at a hedge fund. And I can tell you that right around 1250 to 13 is the average, which is exactly where the stock is right now. So it's in the middle, and I would want to wait a little bit for it to drop, but you don't want to wait too much because you could miss the move. So that's where we get into candlestick patterns. We look at the daily chart. There's a big resistance here and a lot more at 1289 and 1250. So we could almost say that we could get into LEAP options now because we could always dollar cost average if it drops back into the $11 range. So we've talked about dollar cost averaging. So how do you exit SPY, SoFi, Palantir, all these stocks that you're running LEAP options on? Well, if we were to get in to SoFi here and it was to drop down and we were to dollar cost average down there, then we'd be looking to take a profit when the stock moves up. So we want to look back over here and see that we have a lot of interest here at 1470, here, and a bunch more down here and over here. A lot of resistance up here in 1450, 1470. So what I would be looking to do is, as the stock moves back up, as soon as it approaches 14 and 1450, I'll be actively watching to see what's happening. And the moment I see it coming back down like this, and it starts to push back down and doesn't stay at this support, then I will exit. So this profit is mine. Now, in order to gauge this the right way, we have to look at the candlesticks. If SoFi or whatever stock you may be trading comes up and there's a lot of resistance up here, if it breaks through this resistance, comes back down to the resistance, and then starts stabilizing and moving up like this or consolidating to the right, I will hold to make sure that this isn't a fake out and it's going to continue to go up. And if it goes up in time, I keep holding. But if it comes up like this, comes back down to retest, and then breaks through, it'll usually come up a little bit more and then resist as a ceiling and then come back down, and I immediately get out here. And this way, I'm making all these profits or even more profits. And this is typically how I gauge the stock, because there's a lot of resistance here. And usually if a stock hits that resistance, comes down, retests, and then breaks to the floor again, then you're losing money. So usually when it gets up here, comes back down, I see the retest, and if it breaks through, I'm immediately out. So in this instance, if it broke and fell back below 1380, 1390, I would get out of SoFi LEAP options and take profits. If it bounced off 14 or 1380 or 1390 in this 20-cent range, it bounced off and it continues to go back up or consolidate, I would hold, and I would watch this with a keen eye to make sure that I'm not losing any potential profits, because you can't go broke taking profits. And this is what you always want to watch, is your resistance, which is your ceiling right here and here, and your floor, which is essentially down here. This is what my AVP strategy covers in the webinar. It covers this kind of stuff here, so you guys can have more of an understanding of what's going on with price action. And AVP is my average median price in between, and I base everything off price action, which is very powerful. So what we're doing is we're looking for the upside. Most stocks return to their peaks at some point in time, especially if they're good stocks, which SoFi is good. And so we're looking for SoFi to return to $17 or $18. So let's go look at SoFi on a LEAP option. And we're going to look at the same time frame, March of 26. Here we go. And you want a 70 delta. And a 70 delta is going to be tough. You're going to either get 65 or 80. So a 13 or a 10, I personally would do a 10. I really would not do 13. I would do 10 for sure. This is going to give you $465 average cost. When we look at a $10 LEAP option with an average cost of $465, this is a delta of 80, which means every time the stock goes up $1, this will go up 80 cents. This option will go up 80 cents. And so if the stock was to drop to say $11, which is $1.50 below where it's at now, then essentially this would almost be the price of the 13. It would be in between. So it would go down about $80. It'd be worth about $3.90-ish. So there's that to think about. We could dollar cost average like shares. If SoFi goes back to 18, it's a $5 move, which means this $10 LEAP is going to essentially be the same price as the $5 LEAP. So it's going to go from $465 to almost $865. There's going to be about $350 to $400 gain, like maybe $375. So almost double your money. So if SoFi moves $5, you will almost, and probably with theta, applied volatility, time value left, you'll double your money on these LEAP options. So essentially, if you were to buy 30 LEAP options and you were to make $400 profit, there's $12,000 there. 12 grand turns into 25 grand or 24 grand. So there's a way to double your money. You see, if you were to buy 30 LEAP options times 465, 13,900 turns into plus 12,500. So 13,900 into 26,000. This is a very good investment for anyone who has $100,000 or more. They can put 10% in and essentially double their money, turn 13.9 into 26.5 or 26,450. It's a very good strategy. If you have a bigger account, like I do, $700,000, you could do 10%, which is 70,000, or you could do 5%, which is 35,000. If I was to do 35,000 divided by 465, this would only be 5% of my portfolio. This would give me 75 LEAP options. So essentially, I could make $30,000 the next year in LEAP options. This is how you make exponential amounts of money, but I'm not specifically holding for any one particular price. I'm going to look for gain. If I buy these LEAP options and in 2 or 3 months, I'm up 30, 40%, 50%, I will get out, because you can't go broke taking profit. Now, if we were to buy these LEAP options, you want to go above your cost basis to sell short calls against them. So if we look at a $10 strike price and $465, which is $4.65, we'd have to be selling 1465 calls. So if we were to go, let's say, out to July 18th or September 19th, we'll just go July for now, we could sell a $15 call for $52, and we could sell as many as we have leap options. So if we have, let's say, 50 leaps, well, then we could sell 50 of these call options against the leaps. And this is $2,500. So essentially, if we were to buy 50 leap options at $465, this would be $23,000. And then we were to sell $25.67 on the covered calls. If they expire worthless, then that's free premium. We keep holding. And if the stock goes up to, like, let's say close to 18, well, then you're making 50 times, let's say 350 on the leaps profit, 17,000 plus 2,500 on the covered call. A $23,000 investment returned $20,000 in 4 to 6 months, maybe 8 months. It's less than a year. It's a lot. S&P returns 5 to 10% per year. Even in bullish years, it's like 12 to 14. I'm showing you where you could make between 75 and 100% per year. Even on a small account, on a bigger account, it's even more powerful. And if you don't sell covered calls, it's still fine because the leap options are going to appreciate with the stock going up. So what happens if you sell these short calls, let's say at 15, and they're worth 52, and the stock goes up $5? Well, they're going to be worth, similar to the $10 option, they're going to be worth $340. So essentially, if the stock goes up $5 after you sell these short calls, well, then you're going to be $300 in the hole times 50, right? You're going to look at this as a $15,000 negative position. However, your leap options are going to go up by about $395. So 19,000 minus 15,000, you're still going to make $4,750. I'm doing this with my elite students right now. Your leap has higher gamma and higher delta and less theta and less volatility than the short call. And therefore, there's no IV crush on the leap option. And therefore, there's no gamma decay, which means essentially that if your short call goes in the negative 500, your leap is most likely 600 in the positive. So you buy to close your shorts at a loss, sell to close your leaps at a gain. You still walk out with profit. This is how we make money with leap options. It's very powerful. If you're confused about gamma decay, theta decay, vega, volatility, and the things I explained here between the short and the long calls, then the webinar this Friday is for you. Tomorrow, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific. Link is in the information box below. Limited spots. There's only so many people I can take into these webinars, so there's a cap. So if you guys want to be there and learn these strategies, I would love to see you there so I can help you grow your portfolio. There's going to be a huge announcement I'll be making at the webinar. And of course, I'll be answering your Q&A and hanging out with you guys, answering your questions. But this is how we make money on leap options going forward. So if you were to invest in SPY and you were to buy these leap options for $4,000 and you were to buy, let's say 15 of these, a $60,000 investment, 15, double your money, $4,000, $60,000. Then you'd also buy SoFi leaps and you had 50 of those times $395. Just buying and holding, you can take $80,000 investment and make $80,000 profit. Essentially, whatever amount of capital you have, you can essentially 60 to 100%. 75% is the safe spots where I usually take profits, but you can get about a 75% return in 6 to 8 months or more. So if you have a $200,000 or $300,000 portfolio and you diversify properly between SoFi, SPY, Meta, Microsoft, Google, NVIDIA, AMD, Palantir, and you do these stocks the correct way, you can take a $200,000 account and turn it into a $300,000 or a $350,000 account in less than a year quite easily. I mean, this account that I'm in right now, I started January 2024 with $16,000 and it only had $200,000 in November. I've grown this account from $200,000 to $700,000 since November. This is a very easy thing to do if you understand market manipulation, psychology, and you don't overthink things or get stressed out or emotionally attached to stocks. And you just have to learn to trade with your emotions off. I made over $150,000 in December, $225,000 in January, and I've made over $80,000 the last 2 to 3 months. This account is growing exponentially. And this is how you trade. And I trade with my emotions off. As you can see, I don't have very many holdings anymore. I got out of Google, Microsoft, Meta, Wayfair. I made like $8,000 on AMD almost, like $7,000 and change. On Wayfair, I made almost $4,000. On Microsoft, I made a killing. I made like $26,000 in Microsoft. All of this happened between March and April in a down market. When the market was up like it was in January, I made a lot more. But these are the strategies that you can implement into your portfolio to achieve these consistent results. And like I said, even in a down market, you can make consistent income. If you want to see more strategies like this or how to dollar cost average DCA, my 33-10 rule, and my AVP strategies, comment below. I'd love to help you guys out and make these videos so this way you guys can make more money and understand the market better. Personally, with LEAP options, I would not be selling covered calls at this particular point in time. I would be honestly looking after entering now because we're in the middle of the AVP. We add now, stock drops, dollar cost average, and as it comes up, I'd be looking to sell covered calls near the top. So once SoFi gets back up around $14.50, I'd be selling $15 or $16 call options. You don't sell call options in the middle of my AVP or the middle of Bollinger Bands or the bottom. You average your cost out, and as the stock rises and it's near a top or near peaks, that's where you go above and start selling covered calls if you need to. But you can just utilize these LEAP options just like stock and utilize them over the course of 6 to 8 months in order to get into the move right now that's about to happen. And like I said, this is a very powerful strategy to grow your account exponentially. You can essentially take a decent size account of $200,000 or $300,000 and turn it into $600,000 or even $1 million if you play it right with the LEAP options over the course of a year or two and trade the right stocks. I look forward to seeing you guys in the webinar tomorrow, Friday, May 23rd, 6 p.m. Eastern, 3 p.m. Pacific. Links in the information box below. Very limited spots. I have a huge announcement, and I'll also be taking your questions and helping you guys understand the stock market even better. If you're a beginner or you don't know where to begin or get started, or maybe you're losing money, I will be able to help you tomorrow at the webinar, showing you how to enter, how to make money in a down market, in an up market, entry signals, technical analysis, psychology, showing you and unveiling to you beneath the mechanics, the working mechanics or gears, the cogs in the machine, so to speak, on the stock market. I look forward to seeing you guys tomorrow. I'll see you on the next upload and tomorrow at the webinar, right? Take care of yourselves, fam.